Hello everyone, welcome back to another video. In today's video, we're going to discuss what is imbalance in footprint stroke order flow charts. So to start with, what I have on my charts is the Nasdaq 100. So on the left hand side, you can see the volume profile, and on the right hand side, you can see the footprint charts. So I'll just discuss what I have on the chart over here so that you can follow when we go deeper into the imbalance part. So this is going to start from the basics, and then we'll go step by step into how you can use this very simple technique, understand what it is, and deploy it as a strategy if you want, or into your trading, whatever you're trading, even if you're using price action alone. So what I have on the right side, if you look over here, is the left side depicts the bid and ask. So generally what you see here is generally if you see any footprint chart, I'll just tell you what the general footprint looks like. So what you see on the left is the sell volume like this, and what you see on the right is the buy volume. Let me get it out here. So this is something what you see, and if you switch off the profile rather, so you get something like this. Okay, so you can change the background like you want. So this is one way to depict a footprint chart, wherein you see the deep reds over here is where you see a lot of buying volume present, and the black box that you see is the volume POC. Okay, so this is being plotted in accordance with the maximum volume at any given point. Now this is one way to have your chart. Now what you see on these charts, these blue dots depicting, these are the imbalance areas. So again, you can set it up from here. So what I have over here is like this blue depicts that there is an imbalance on the buy side. So if you look over here, if I can make it white, you will see what happens. So if I make it white, you see these white colors. So there is an imbalance over here. I'll just go get into what it is, and then further how you can deploy it. And similarly, I have a red over here. So if you want to change it, let's say you want to make it yellow so that you can see it. So you can see over here, this is a yellow over here, and it depicts a sell imbalance. Now let's come into what and how is it plotted over here. So we'll go step by step, and then we will put on the charts that we want to see, and that is what I prefer. You can go ahead and change it according to what you want, and the essence is I just want you to understand what it is and how you can use it effectively whenever you are trading, whatever kinds of market you are trading. So how is this calculated? So the imbalance is calculated diagonally. Again, I've done a video on this. Why do you look at all the prices diagonally? Because at any given point, I'll give you a simple example. So if, for example, you go to a shop and want to buy something, let's say anything, let's say a bar of soap, and he would always want to sell it to you at a higher price. So the right hand side, whatever over here you see is generally the buy volume, but actually if you see the market depth or your broker terminal, you'll see the bid and ask. So on the left side you see the bid, and on the right side what you see is the ask. So what he's asking for you from you would always be a higher price. So that is why let's say this is again the already executed market order. So what comes out here is exactly the opposite what you see on your broker terminal. So when you see a limit orders, they're always bid and ask, rather limit buy and limit sell orders. What you see on a footprint is exactly the opposite, that is the market sell and the market buy orders. Now coming back to why do we see them diagonally like this? So as I said, whenever someone is going to ask from you anything of for a particular object or a product, he's always going to quote higher than what you are ready to pay. So that is why the ask will always be higher. Similarly, whenever you are going to buy a bar of soap, like we discussed, you would want it at a cheaper price. So what you will what you are ready to bid will be lesser. So that is why we look at it diagonally. The bid is always lesser and the ask is always higher. But when it comes down on a footprint chart, what you see over here is our market sell orders, and what you see on the right are the market buy orders. So nevertheless, since the concept remains, so that is why we look at it diagonally. Okay, now comes the calculation for imbalance. When you look over here, it is imbalance percent is let's say 300%. So in essence, it means that whenever I see the diagonal crossing 3 times, for example, let's consider this scenario. I'll just get my marker on so that we can see everything clearly. So let's consider this scenario when you see a buy imbalance. Okay, so 103 is a buy imbalance. Now you would ask, there is a lot of volumes which are higher than this, but why this one? it is because when you compare it to this 10, it is more than 3 times. Okay, so whenever it is more than 3 times over here, I'm sorry, not this one, 300% is 3 times. Okay, it's in percentage, so that is why it means 3 times, not this. I'll come back to this. This is something else. Okay, so whenever you see this value more than 3 times, you will have this plotted as blue over here on the buy side. So because the market buying buyer is more than 3 times, so that is why the blue is on the buy side. Now let's come to an example, some other example. Let's see if we can find one on the sell side. So let me see. So this is one. Okay, so again, if you look at this place diagonally, okay, so if you look at this place diagonally, what do you see? You see this 3 times more than this, not this, but this. Okay, so that is why it is plotted in yellow and blue over here, like we just discussed, and the settings are over here. Now you can go ahead and change this. We'll go and discuss when we come back to the charts and we're looking at the live markets again, and we're learning how to deploy this strategy. Okay, so now comes the next part. What you want is, what is this? Okay, so this is support resistance zones. Again, you would see this zones being plotted like this. If you want these zones to be plotted, let's say at a count of 1, so if you have 3 in a row, it will plot a support and resistance zone over here. But since we've not got 3 in a row for the past few times, so what you can do is you want to check this indicator whether it is working or not. So here you go. So whenever, as soon as I set it to 1, so even if I have 1 imbalance, I have this getting plotted. Similarly, I have got 2 over here and I'm getting this plotted, and I'll get a sell imbalance whenever this gets plotted, and it will be red in color. Okay, now let's come to another point. Let's shift it back to 3 and get it back to 3. Now let's discuss what is the importance of these, now that we know what the formula is, how it is plotted, and how can we use it. So why I wanted to explain this is so that you understand in the entire context what is happening when the markets are moving in up and down and creating imbalances. Okay, now let's say, for example, let's go to a better chart that we were having. So I want the bid and ask on the left hand side like this, and I want the delta on the right hand side. This is what I prefer. So if you see that this is the bid and ask and this is the delta, so I get to see the delta and the bid and ask all together in one shot. Okay, let's change this back to red. Okay, and let this be red, and let this be back to blue. Okay, something like this. Okay, and let's let everything else be the same, and we want to see the profile as well. So now what I have here is, let's get back to this chart. Okay, so now what I have here is I have the profile also plotted. So what it does is, again, in essence, it's nothing too fancy. It's just that in one glance, when I'm looking at the charts, I can straight away see. Let's consider this part. So I can see a lot of buying. It's not a lot of, but just for context. So why I'm saying it's not a lot, because look at the volumes before and look at the volume here. It is nothing too high. You can compare it to the previous bar also. So with time, you will get to see this also when you're looking at the bars. At one glance, after a lot of practice, you'll know that this is not something out of the ordinary. Anyway, getting back to the charts. So what I see in this particular bar is, as soon as I look at the chart, is there is a lot of selling that has come in. One, and look at these numbers. So all these sellers obviously would have tried to take the market down. Look at the bar. So it has gone down and failed. From which level? This is a level where again some seller would have come and tried to take the market down but failed. Okay, it doesn't mean that the market is going to go up. This is a consolidation phase, so the market is yet to decide where it wants to go. And just moving out of context a little bit, if you look at the chart on the left, you will see this is a low volume node. Sorry for that. So you'll see this is a low volume node, okay, over here. And obviously when the market first approached, this was one place that we keep looking for towards entering a short, because we are expecting a sort of pullback to the next low volume node, the first one being this, the next one being this, and so on. So this is getting too granular, but you can understand what I'm trying to get at. Now let's come at how is the imbalance cost. Okay, so in a market where the prices are not moving too much or are ranging. Let's say these three bars. In these three bars, I wouldn't consider these buy imbalances or sell imbalances too important. Why is that? I'll just let you know. So now let's come to the point, how and why are these imbalances created. So for example, let's consider a scenario that there was some person who was, you can see a lot of buying that is happening here. Now there is someone over here who is passively absorbing everything and wants the market to go down. So the first step he will do is, when he's seeing such orders and such high market buy orders, or rather obviously the market buy orders or the buyers coming in, what he's simply doing is sitting here and absorbing everything. That is his first step. Okay, so this place is again coming back from a volume POC that is untouched over here. Let's not go over there, but the idea is that there is someone, let's consider that, who is ready to absorb all the buyers that are coming in. So that is the first part what he does. Now if he has to take the market down to, let's say 18,900, this is the level he's targeting, or this is the level, let's say for the timing someone is targeting, someone who has a little bit of money or cash. Okay, now what he will do is, after this step, after these two steps are over, he will have to initiate or get aggressive, something like what is happening here. So in that case, he will have to not dump exactly, but he will have to be the initiator. By that I mean, he will have to initiate market sell orders and not simply be passive here by absorbing all orders. So he's done the first step, and now he wants to he wants the market to go down. So for that, he will have to enter the market on the market side, or he will have to get aggressive, in other words. So to get aggressive, what he will do is, he will start punching big market sell orders so that the market moves down. Now let's get back into some basics. Okay, so how do we know that the player who's got into this, that someone who has got in here is actually a big player and would be successful in taking the market down? So this is again your limit order book. Okay, and let's consider these values. So for example, this is limit buyers that you know, bid and ask that we call. This is not the footprint chart. This is your broker terminal, or the depth of market that you call. So this is the bid, this is the ask, or you can also call it the limit sell orders. Okay, so for example, we had let's say 10 here, 5 here, and 20 here, and 30 here. Okay, and what we have over here is again similar: 10, 5, 2, 3, and 5. So you can see a lot of limit buyers are present here, over here. Okay, and along with it, let's say when this market reached this point, this was the scenario, and along with it, a lot of market buyers were coming in and trying to take the market up. And who were they taking the price of? They were taking the price of these guys. So when a market buy order of 10 steps in, what it does is it takes out this guy, okay, who is sitting on the ask. So whenever he that is why it's called lifting the offer. So when he aggressively buys, what he does is he's taking off the order of this guy, okay, 10. So the market move high. Let's say there is someone over here, another guy punches 30, the market will move high 20 of this, and let's say there is another 10, he will take 10 of this. So whenever a guy is aggressively buying, he's taking off the guys who are over here on the ask side. Okay, so he's taking the market up in this manner till such time you have limit sellers over here. Let's say, for example, let me erase this so that I can make you understand it a little better. Okay, now let's say for example, let me get this marker back. Now let's say, for example, that there is no limit seller after this. Okay, a market buy order comes for 30, and there is no limit seller after this. There's nothing over here, let's say. So what will happen? He will take this 10, okay, and then he will have to take this 5 and this 2 and this 3. Okay, now what has happened is, although the aggression is being shown from the market buyer, but since there is no limit seller on top, he has had to take all these orders and absorb this and get a really bad price for what he's taken. I mean, for all the aggression he has shown. So this is because, and this is exactly what is called exhaustion. Okay, so this is what happens when the market gets exhausted or there is no limit seller here. So whenever the market buyers who try to step in over here, they will get fills like this. So you would have seen this happening even with you. You try to enter on a market order and you get fills like this. So what is essentially happening is a lack of limit sellers at this price. So what do you think if a big player or an institution wants to get in and wants to buy something, would he risk doing something like what I just spoke about? Would he risk doing this? So the best way to do or move a market in your favor or in any direction, the best way to do it is how? Is by absorbing, let the aggressors come in, and by simply placing your limit sellers here and waiting till the time you absorb enough and your orders are sitting, resting orders are filled, and then you show aggression on the other side. So now let's say he's been sitting here and you can see what has happened over here. So he's been sitting here and absorbing all this, whatever is coming his way. Let's say he's absorbed 600 or 700 of those, okay? And after that, what he's done is now he's full and he says, okay, my money is over. Now what he'll do is he will start punching really heavy sell orders. So what he'll do is he's looking at the book, he's seeing 10, 10, 20, 30, 50. Okay, let's say there are 70 orders here. He'll punch 100 lot order over here. What will happen is he will take all these guys out in one shot. He'll first press 100 lot, he will go down, look what if some buyers are still stepping in, there is a retracement of sorts, and as soon as he sees another retracement, it comes back, let's say over here, he will punch in another 100 lot order, and again it will go down. So when it is going down in this manner, so when he punched in the first 100 lot and all these got traded, so what do you think was happening on the other side? Let me delete everything and get it back again. So what do you think was happening on the other side? So when he took all the orders on this side, market sell orders, what do you think was happening here? There was very little or absolutely no transaction happening there. Okay, so all the there was no market buyer that was stepping in, or even if there was, it was in very less numbers. So what does it do? In a sense, what it does is creates an imbalance like this. So you will see heavy orders like this. So like we just saw, you will see 10 here because all those 10 were absorbed, what we just discussed, 20 here and 30 here. And what will you see on the buy side? 1, 2, 4, 3, because this guy has he's come in and absorbed all market buy orders firstly, because he was waiting, he saw, he waited, he absorbed everything over here, and then he's punched in. And on the right side you see something like this, because he's absorbed all market buy orders and now he's causing the huge selling. So when this happens, you will see these imbalances getting created in a sequence or consequential. So when this happens, there is a support and resistance zone that is plotted, and that is what the imbalance is. So hopefully you could understand this concept, what I was trying to explain it to you. So this is how the imbalances are plotted. And when you see 3 in a row, 4 in a row after something like this, okay, after something like this, it is generally going to give you good fruits. Okay, what has just happened? If you see it in a market which is range bound and you're seeing, this not happening, or on the other side, let's say a lot of sellers also getting absorbed here, a lot of buyers also getting absorbed here, so it will keep loitering around here after some time. Till the time it finds a good move, or it will be very difficult in a range bound market to understand what is happening. So that is why it gets important to plot and decipher these areas. Now again, when you want to see this aggression come in after some volume, or if you look at this place, okay, again this is a low volume node, so we are expecting something of this. But if you look over here closely, there are almost let's say 336 and almost 8-9,000 contracts that were traded here, and you look a chunk of it, look at the POCs that are clustered here. A chunk of the volume in these bars is clustered over here. So we know for a fact, as soon as this volume drops, the price drops of this guy, this price, it drops below this level, sorry, all these guys will puke, and this is what is going to happen, and we're going to reach this level. So again, the confirmation is only after we breach this point, that is this one, okay, and then is where the confirmation comes in. Now if you look at the imbalances that have been plotted after this zone, there is one here, and there is, look at the market buying that is coming so small, okay, after this. So this is first indication that we might get a break, and this is the one which is a confirmation. After this POC it breaks. Okay, so these two are the areas, and like we just discussed, so you can't see the ask over here because it's white in color. I will just do something else as well. So let's get the chart settings over here and go here, and what I wanted to show you was, let's reduce this to 200. Okay, sorry for that. Let's go and get it back to 200. So you can see the first imbalance that was plotted. I have just done this to show it to you. Again, it is not, nothing is sacrosanct. For some instruments I have seen 200 work better, especially for Nasdaq with the order flow setting. Now the other thing that you need to take care of is this. Okay, so I have set it to that $1 will show me one block over here. So this also plays a very important part. So if you change this, the settings will change again, because the number of contracts in a $1 block will be more if you decrease this setting. So I will just show it to you what happens. So if I make it 2, so you can see there is another imbalance that is plotted, because it is now considering instead of a $1 block, it is considering a 50-cent block as one block. Okay, so that is why this has happened. So that is why you have to make sure how you want to set it up, understand what it is, and then choose your block size and these settings wisely. And this is how you can plot and understand what is happening. And you will have to again try and test it on various instruments that are you doing, spend some time. And again, these settings, of course, you will have to let them be as consistent as possible, but again, you will have to adjust yourself in varying market conditions. For example, over here we see a good volatile market, but in conditions where the market is very range bound, you will have to tinker a little bit. Again, we'll get into that a little bit later. So coming back to, before we end our session, coming back to the exhaustion, the imbalance that we just spoke about. So if you look at this chart and you look at when the price approaches this time, it approaches this level. This is the reason why I changed it 2%, 200%. You can see something like we discussed, and you can see the number of orders on the ask side. So that is very, very essential when you're looking at imbalances over here. Let me get this so that you can see it better. Okay, so if you look over here, you can see 952. So even over here, so this on the left side is the volume profile as well. So you look at the volumes that are so less. These are low volume nodes essentially in this entire bar. So when there is an aggressive move, and if the move is to continue, that one of the criteria along with imbalance becomes a thin profile like this. So that is why you'll see some there is an indicator, or you can plot it, the thin print that is called. So when you have prints like this which are very thin, it will mark a support or resistance zone in those areas. So again, that is this, that uses the similar concept that we're just talking about. So it is essentially the same thing, just that even if the balance, the imbalance levels are not plotted, but there are zeros in between, it will draw a support or resistance line based on the thin prints that you see. So over here you can see not only there is an imbalance of sorts between the buy and sell, but the market buy orders over here are very less. So and where does the market go up to, and how do you know that the sellers have stepped in? So you look from where the imbalance starts, and when the next bar opens, it goes exactly here. Again, there are some market buys that try to take the market up. Over here you can see this is very less, a little bit over here, and they failed. And this is why and this is where you can initiate your trade, as we just said, as soon as broke, because we see an imbalance being plotted over here. And that is the difference between the past two bars. And again, you can have your risk reward and stop losses accordingly. Now the next thing is, when you are, let's say the market is moving in your favor and you want to trail your stop losses. So what I generally tend to do, and what I like to do, is, again, there is a thin print over here, and there is an imbalance over here. The combination of both these things, like I just spoke, and the concept I just spoke about. So this is the level where I would like my stop loss to get trailed whenever when the market starts moving in my direction, if it does. Let's go down and see if there is another place, something like this, and you see something like this pop up. So this is another good one. Why? Because the buyers did try to step in here, and there is a low volume node over here, you can see, and the market continues to move down. Okay, so let's see if we can find some sort of, and look at the aggression that has come in from the time we spoke, and it's gone just wow, crazy. So the first time now, after all this, the first time I can see some sort of buying presence or some sort of resistance from the other side is here. So you see these orders, rather I'll just delete this. The first time they come in is somewhere here. Okay, so look at these, a lot of market buy orders are stepping in as well. This is the low volume node and the sell imbalance that you see over here. Again, the what value is not high, but what is essential is it's a low volume node. So this is a zone where you can trail your stop loss if the market was here. And this is another place where you see some sort of I mean, you can say the passive buyers or the other side coming into play. And when you see something like this, okay, and the market tries to hold up, and it the next bar takes out this particular segment or this level over here, you can see these guys also coming out. So this is generally this generally happens in a very aggressive market or a scenario for some time. So like we have a 5-minute chart, so on the 5-minute time frame I can see some sort of buyers that came in here, and maybe they were the guys who were early, whoever they were, they tried to stop it over here, it didn't, or maybe some guys wanted to step in whenever they saw this pin bar, and they were taken out again. And you can see what happens, all these guys are taken out here. And look at something that is interesting, that is, look at this number. Okay, whilst we were talking, and look at the buy imbalance that is coming. So a lot of buyers that have come in here. Now these guys, this is either I mean, these are either stop losses that have got triggered, and this is a very high number. If you see, the other time this has happened is only 3-4 times, but the difference is this is extremely at the low, and if this selling was high, or if this was a genuine seller, he would have actually wanted the market to go down further from here. But this is, again, after that, this is one place where I can see that there are guys who are trying to hold the market here. Again, the level is what you can see, this low volume node over here. This is again, you can mark these points and note it, because this is something what we did expect when we came down here. The volumes have picked up, look at the volumes. And now for example, if you want to go higher, like I said, the first step is absorption, and you see the difference now. You've seen some sort of aggression step in the market. Okay, this is 1, this is 2, this is 3. I'm not saying that you go long right away, but again, these buyers, look at the bars before and look at the bars now. So there is some sort of buying that is trying to step in. Again, my confirmation would be when I see a test of this zone, which is almost, it is almost testing, I mean about to test, and a lot of sellers getting trapped here. I want to show you a bar which I would like to see over here. So something like this bar again over here, but a confirmation of sorts, wherein I see the POC someone close, and this particular bar should not take out this bar. So that gives me a confirmation that whoever has stepped in here will not let the market go down, and maybe I'll get if I have a stop loss of, let's say, 10 points, maybe I'll get a move at least of 20 points, 1:2 or 1:1.5. So hopefully this video was of some help to you guys. You could learn something new. Until next time, thank you, bye bye.